Hello, let me welcome you again, guys. Okay, we're back with another video of this supply and demand basics. So guys, in this supply and demand we will be discussing another basics, guys. As you can see my name on the screen, Charis Timalope, or you can call me Terence if you like, whatever that works for you. This is the real forex supply and demand beginners course part 2. So I dropped the part 1 earlier on, which we were discussing the rally base rally, the rally base drop, drop base drop, and drop base rally. So right now we will be discussing 4 topics on this one again. On the other video there were 4 topics. On this one there are also 4 topics. So I will try to make each video for like 5 to 10 minutes max, so that I can have a video which discuss a certain topic and a video which discusses a certain topic. So let me get to the topics that we will be discussing on this video. These are the topics that are to be covered on this video, like guys. So number 1, it's line placement. So you know guys, in supply and demand we use rectangles or lines to draw our boxes, to draw our zones. So what is line placement? Let me tell you all about this thing called line placement and how to place a line or to draw a box or a rectangle correctly. I'm having my book here, so everyone who watching this video must have a book. You must have a book and a pen to write everything that I say. So in supply and demand, a line placement, in supply and demand, we can use lines or rectangles to spot our zones, and there are rules which applies to how we place our lines or draw our rectangles. So a quick example, guys, it's a low risk, how to minimize your risk, and a high reward, how to have a high reward. So let me simply draw the basics real quick. Okay, so a low risk high reward is something like this. I'll just make a quick example, guys. It's just something like this. Okay, let me start with something like this, guys. Let's say price it's in supply zone, it's going to the demand zone, guys. Let's say the price is somewhere right here, and we will have our box right here, guys. This will be our box. Our what? We can use lines or we can use rectangles, and right here it will be our supply box, guys. It will be our supply box. So what do I mean about this low risk high reward thing? Okay, let me explain. When I say low risk high reward, I mean something like this. We have our stop loss right here, and then we have our buy order right here. We will buy right here, then we'll have our stop loss below this. This is called the proximal line. This is called the proximal line. This is called the distal line. This is where we put our stop loss. That is line placement, guys. So to explain, guys, to explain this line placement, I will start line placement in demand zone. Before we get into charts, I want to explain real quick here how do we spot these things on our charts. How do we spot them? I will get into the chart after this. So guys, here it is just a quick illustration on how we spot these line placement, how to place line placement on correctly on our charts. So if we have our buy here, the price will quickly rally up to the supply zone. In supply zone, we will wait for the price to sell again. So we'll have our distal line above, we'll have our proximal line, we have our distal line somewhere here. It's our distal, our proximal, our distal. I just made a little mistake right here. There was a mistake right here. Let me rub it quickly. Oh yeah, okay, so that is our line placement, guys. We will get into the charts after this. So another topic, the origins. So I know you must be asking yourselves, what are the origins? How do we see if this origin is valid? Things like that, guys. But don't worry, because I will walk you into everything correctly. We will go into the charts after this. Right now, let's focus on the explaining these things, these four main concepts, so that you can understand. Write them down. I'll quickly go to my book and explain what do we mean by the word origins. So guys, let me explain what the origin is. An origin of the move is what we first look for to confirm the area as a supply or a demand. An origin of the move, guys, it's where a price moved up drastically to create an imbalance at that zone, so that sooner or later the price will come back to that level. If it is a fresh level, the price will come back to that level to retest it, and then it will go back up again. So we first look at origins of the move in order to determine if a trade has a good level of probability. So if we want to see if a good trade has a good level of probability, just like I have illustrated earlier on, the low risk high reward, that's when the origin of the move comes in. We must have a low risk and a high reward probability. That's origin of the move. Now let me go and get into speed bumps. I know I have explained this in the group, so you have everything, every explanation. Right now it is just a quick explanation with a audio and a video, so that you can see how I spot these simple basics on my daily charts, H4 charts, hour 1 charts, even on lower time frames. So what is a speed bump, guys? I know you must be asking yourself, what is a speed bump? The speed bump is just a pause or area of consolidation where the exact trend continues. So before the trend continues up, it will create a rally, base, rally, a rally, base, and a rally. That base will have many basing candles, which we won't take it as a basing candle, and we won't even take it as a is our turning point. We won't take it as our demand zone if it's a rally base rally, and we won't take it as our supply zone if it's a drop base drop. So these speed bumps are just to trap sellers the market makers are trapping the sellers to think that they are going to sell the price after the sellers have sold many, have placed more sell positions. The market makers will move the price back up into the correct direction. Do not trade against the market maker. You have to understand who is on the other side of the trade. If your trade is not going exactly how you expected it to go, you must ask yourself, why didn't it go exactly the way I expected it to go? So right now, guys, a speed bump, I hope you can understand what is a speed bump. It is just a pause or a consolidation where the market makers trap the sellers. After that, they move the price back up again. So that is the whole explanation of a speed bump. Right now we get into fresh levels. What is a fresh level? You must be able to explain these things without looking at your notes, something like that. You have to know them by your head. So what is a fresh level? A fresh level is a level where the price has not yet came to retest or to touch that level or that zone. That is a fresh level. If you can spot an origin of the move, it will create an imbalance. That imbalance, it's your fresh level. Price hasn't came to that level to test it yet, but sooner or later it will come to that zone to test it. Then it will rally up again to our previous supply zone. The price always goes down, up and down, creating imbalances. If the price is not consolidating, it means there is an imbalance. But if you open your charts and you see price is consolidating, just know that there is a balance between buyers and sellers. But if the price is not consolidating, if the price it is volatile, you must know that the buyers have the price or the sellers have the price. The buyers are in control or the sellers are in control. So right now, let me get into the charts. So I'll just drop this video right here and then create another one where I get into the chart.